high interest rates and also rising interest rate, I think private credit is really in a golden era, providing investors with high total returns. I think even in infrastructure, which we are talking about here, senior debt has been said to be the new core. So senior infrastructure debt is achieving mid to high single-digit returns today, and that has really impacted investor appetite for some of the most core end of the return spectrum.
So if you want to invest into Asia, I think the first movers on the PE side would probably start with a Pan-Asian fund manager. Given the resource intensity of such a strategy that private debt requires, I don't think this will work because, again, you need the kind of a local content, you need the local presences in order to do things you want to do in a way that you want to do. So in this respect, you probably need to do, just really cluster approach by looking at the different regions and countries. And in this respect, I would say, for example, in Australia, just to name a few, it's this classic story about how private debt, for example, evolved in the North American, European markets. Banks are trenching out, just only few available. And this is a classic story where you can really reap premium because you're teaming up with someone who has a bargaining power with them, to support the financing of market companies.
I think the VC and the PE industry should be looking at carbon impact per dollar invested. And I think we should be looking for the opportunities that are the most capital efficient in creating large reductions in carbon emissions.
Yeah, I think one of the key trends that has not been spoken about as much is how much of the region is getting homogenized from a consumption behavior perspective and what that means from an opportunity perspective. If you look at Jungle, we've got about 50 companies across the region, financial inclusion, retail, software. 90% of these companies are now in 2 or 3 countries, not just their home countries. And what that means is they've now been able to expand their TAM, their addressable market, by 2 to 3 times.
Yeah, well, I certainly think regulation is an important watch area for our market. We've seen Europe increasingly start to set expectations about what it means to be a sustainable or impact investor, and in different Asian markets as well, and then the US too. So regulatory shifts and expectations are something to watch. I think, sadly, greenwashing and impact washing is still something to watch. There's a lot of, I think, attention and energy to start building products in this market because of the enthusiasm on the part of a growing number of LPs. And so making sure you're clear about who's really committed and who's just trying it on for the opportunistic aspects of it is important. And third, I think, just continued growth and energy around climate as a key sector with an impact is what we should expect to see more of next year.